You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I think the wider investing public isn't investing in this sector yet, and that's why it's such a fantastic opportunity right now. So you still have just a very, very small percentage of the total investor universe out there paying attention to this sector. At some point, the game of chasing momentum stocks higher is going to wear out, and the stock market's going to head south again. And when that money comes out, it's going to be looking for the next hot play, and that's going to be our sector, the precious metal sector.
Welcome back. This is Mining Stock Education, and I'm your host, Bill Powers. Thank you for tuning in. If you would like to engage the show or any topics I cover, feel free to email me at bill@MiningStockEducation.com, and I do appreciate many of the recommended guests in some of the emails that I've been getting, so I've been looking into some of those recommendations. Thank you very much. Well, today we're going to be hearing from a returning and very popular guest of this show, that being Dave Kranzler of InvestmentResearchDynamics.com. If you don't know already, Dave is the co-producer of the Mining Stock Daily podcast, as well as the editor and producer for the Mining Stock Journal. And you can find more about the Mining Stock Journal at InvestmentResearchDynamics.com. And I do recommend the Mining Stock Journal as one of the mining stock newsletters if you're looking for quality commentary on the macroeconomic situation and specifically the junior gold sector. That's an excellent resource, and you get Dave's thoughts before Dave shares his thoughts to the greater public via YouTube interviews or podcast interviews like you're hearing now. With that being said, Dave, welcome back to the show. I always appreciate your insights, and as we have just experienced this oil massacre, when you look at that, what does this mean for the economy, gold, and gold stocks?
First off, Bill, thanks for having me back on again, and thanks for that kind intro. Deservedly or undeservedly. I appreciate that. So with the situation with oil, I remember reading several months ago some analyst, and I don't remember who it was, who had suggested that, with the supply of oil building and storage running out, there's a possibility that we could see oil go negative, because at a certain point you run out of storage space to take delivery if you're long oil futures. And if you're long oil futures and you've got a delivery that you have to deal with, you need to pay someone to, take the oil off your hands if they have storage space. So that's sort of the technical dynamic that would cause oil to go negative, right? Because you got the cost of storage, you've got oil you can't store anywhere, so you have to pay someone to take it. Presumably whoever takes it gets paid to take it. It has some form of storage. So, and that's, simplistic explanation, but I think the more economic, supply demand explanation is that, and I can't speak to whether or not, the various oil producing countries of the world have been ramping up their production over the last 3 to 6 months. Presumably Russia and Saudi Arabia got into a price and supply war. But at any rate, for me, it's clearly a function of the bottom falling out of the demand for oil. I mean, just think about for yourself. I mean, how much less have you been driving since we've been on the shelter and home thing?
Yeah, one tank every 2 months rather than 2 tanks every week.
Yeah, exactly. I think I've filled my tank up maybe once since this whole thing started. Mm-hmm. So, and we're talking about, it's not just the United States, although the United States, I guess after China, is the second largest consumer of oil. Maybe we're still the largest. I don't know. We're first or second. China's first or second. So when you have what's happened to the economies happen, the demand for oil, just like I said, the bottom falls out. And I think that the collapse in the price of oil is reflective of the true state of what's going on in the global economy, and specifically the economy here, versus the pie in the sky projections that we're seeing come out of Wall Street. I've noticed for the last couple of weeks, both Goldman Sachs and JP Morgan keep revising lower their estimates for second quarter GDP and second quarter corporate earnings. And now JP Morgan is out saying, there's going to be a bloodbath in S&P 500 earnings, and they're not going to recover until 2023. Well, who knows? That's everyone's just, licking their finger and sticking it in the breeze. But, for me, the fact of the matter is what's happening in oil reflects the fact that the economies are far weaker than we can know until we start to see honest numbers that measure what's going on in the economy.
And then gold. Some have said that low oil prices plus a strong gold price equals buy gold stocks. I assume you would agree with that.
Well, I think the gold stocks were undervalued before what happened to the price of oil happened, but certainly for producers, 50% of the cost of production, as you know, Bill, is the cost of energy. And so, if you've had oil go from 50, 60 bucks a barrel down to 20 bucks a barrel, these large mining companies, the producing mining companies, that basically is going to be about a 25% reduction in their cost structure, right? Their cash cost structure, their cost of production. So, the combination of a much higher gold price, as well as, all of these large producers had to streamline their cost structure when, between 2012 and 2016, when basically there was a 4-year bear market in the price of gold. So you've got essentially large producers who are, and for lack of a better term, I'll say they're lean and mean right now from a cost standpoint. And the cost of their biggest input just dropped 50, 60%. So, I have a feeling when we start to see second quarter and third quarter earnings, assuming, these mines, a lot of these mines get to ramp up into production in the next couple of weeks. And I know there's plans for several of them too. And a lot of mines were never shut down. There's areas in, in North America where mines haven't had to stop, or they, shut down for 2 weeks and they've been ramping up. So, let's just say third quarter earnings, I think, are going to be just, blockbuster, like exceed anyone's expectations. So, just on a PE basis, these large cap miners are still very undervalued. It actually does filter down into the valuation of the juniors, because a lot of these juniors have deposits where, they've got gold in the ground that's going up in value as the price of gold goes higher. And, a lot of these juniors are near large mines, large mining companies that are operating large mines, like in, just Canada and Nevada, for instance. And a lot of these projects, the large mining company can just go in and buy the project and move the ore to its mill and process it. So to that, that dynamic also increases the value of junior explorers that have proved deposits.
Right. And one of the ones that you've talked about on this show, Precipitate, didn't they just do a deal with Barrick?
They did, and we can get to that a little bit later.
Okay. Regarding silver producers, and silver juniors, I should say, both of us like the silver juniors, but since we haven't spoken in a while after that mid-March crash where silver went under $12, I think down to like $11.62 or something like that, and then a lot of those silver stocks sold off, and then they roared back. And what was your take when silver was under $12? A lot of these mines, the production was being shut down in Peru and in Mexico, yet the silver miners continue to climb higher and higher. Do you think that this is just forward-looking speculators jumping into these, trying to position themselves?
Again, it's, it gets back to even at $12 or $13 silver, a lot of these silver companies, silver miners, were undervalued. But just to address this concept that silver fell, well, I'll just go, the front month contract briefly dipped below 12. So, and that was that big sell-off that we had in March, where essentially hedge funds were dumping everything in order to avoid margin calls. Well, what drives me crazy about that is, that sell-off, it was referred to as, investors selling gold and silver. Well, no, they weren't selling physical gold and silver bars. They were selling paper silver. And that sell-off was purely a function of a sell-off in the paper gold and silver market. Very little, if any, physical gold changed hands down at those levels, and that's why away from the money printing that the Fed's doing, that's why at least the price of gold, even the price of silver has bounced back pretty quickly, but especially gold. So and I think the market, the smart investors understood that, and I think you're seeing smart money accumulating juniors and producers even now. You still have the hot money, the fast money, the general stock mutual funds. They're still chasing, the stocks that were the bubble stocks, hoping to catch a ride of momentum higher. Well, in the meantime, you've got, especially if you look at the volumes and you talk to company executives, there's very smart money that's buying, especially the juniors that are just scooping up the juniors.
We'll be right back after this word from our sponsor. Orin Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio, including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurinresources.com. That's AURYN resources.com. With GDX now breaking through that 7-year resistance at 32, as we speak, it's above 34. Is this, many have talked about this being a confirmation. Is there any significance for you to this, or because you knew the juniors were and the gold stocks were climbing higher eventually, it's not as significant to you?
Well, I mean, it's significant to the technicians. I mean, even, again, if you, and I'm just talking off the top of my head on these numbers, but let's just say the last time around, and I could look at the charts and, I won't take the time to do that here, but let's just say the last time that gold was trading around 1750, the Huey and the GDX were trading at much higher levels. So, the mining stocks have a long way to go to catch up with their intrinsic valuation relative to the price of gold and silver. And, at that point, we're not even introducing into the conversation the degree of currency devaluation that's going on right now, which is going to drive gold, silver, and these miners to the moon.
When you look at this COVID-19 crisis, obviously we've talked a little about what it's done to the economy when you gave your comments on oil, but for junior gold speculators in particular, are there any risks out there for us now as a result of what this virus and the reaction from governments has been?
That's a good question, and I think it's kind of a complex answer because a lot of it depends on where the junior mining company has its projects, what country, et cetera. Like some of these countries have been a lot more strict about their lockdown than the U.S. has. In fact, I think even in Nevada, I don't know that exploration was strictly prohibited. So,
no, it's critical infrastructure or essential business in Nevada and Idaho, I know.
Yeah. So, and a lot of the juniors kind of shut down their operations anyway, because you still have to do the social distancing precautions and all that stuff. And, to the extent that really the prime drill season in North America, well, even in Mexico is spring, summer, and fall. So a lot of these juniors can conduct their mapping and their planning and their drill plans, through the virtual, on a virtual basis. So, the geologists can all hang out in their house and share data and a lot of these companies were still planning their next drill program anyway. So I guess where you want to be a little bit concerned is if you own a junior stock that doesn't have a lot of cash and might be reliant on a financing. But I'll tell you what, I haven't, through this whole thing, junior mining companies have been executing stock financings. And again, I think it gets back to this idea that savvy retail investors who are familiar with the sector and smart money understand what's going on, and they know that this is a great time to jump into these stocks. I mean, you've seen it. Arcana they raised what, over $2 million.
Mm-hmm. Last week.
So yeah, so even companies that have speculative projects are able to raise money right now, and to me that's extremely bullish.
Back to Precipitate, Dave, if I could get your commentary here.
Sure.
What's your updated commentary? And then also, could you address this potential trend we're seeing where these major miners, whoever's making the decision with them, they're, doing these joint ventures with these exploration companies close to some of their projects. So should, exploration company speculators, should we be paying attention if one of the big dogs is nearby? Perhaps that'd be a better exploration speculation?
Absolutely. Absolutely. So Precipitate was able to, so they were able to scoop up a property in the Dominican Republic from a distressed situation, and the property happens to be adjacent to Barrick's Pueblo Viejo gold mine. It was originally a Barrick Gold Corp joint venture. Now it's Barrick Newmont. Barrick's the operating partner. It's one of the largest operating gold mines in the world, and apparently what the story is that the parties that owned the land that Precipitate bought, Pueblo Grande is what it's called, I guess they kind of got into a fight with Barrick. I guess Barrick was trying to buy the land from them lowball, so they wouldn't, ultimately they wouldn't negotiate with Barrick, so it opened up the opportunity for Precipitate to go in there and buy the property. And Precipitate geologists think that there's a possibility that the mineralization that mineralized the Pueblo Viejo property may also have mineralized the Pueblo Grande property. And so essentially, Precipitate hasn't even drilled any holes. They've done, soil sampling and all the preliminary exploration stuff to kind of get ready and plan their drill targets. And they were going to start drilling, I think, in February before this coronavirus thing started, or maybe March. And I think it was February, but apparently what was going on was they were in negotiations with Barrick for the joint ventures. So, Barrick is obviously familiar with the property. They know what the potential is. And so Barrick negotiated a deal where they have the ability to earn up to 70% interest in the project as the operator, and they have to spend $10 million over the next 6 years. And then they also invested $1 million into, these are Canadian dollar numbers, $1 million into Precipitate itself. So initially the stock jumped about 20 or 30%, and then it fell back to where it was before the deal was announced. And I honestly think that the market doesn't necessarily understand the deal. I chatted with the CEO after the deal, and let's just say this thing plays out and Barrick eventually earns in at 70%. If it turns out that, let's say there's 1 million ounces of gold equivalent on this property, Precipitate's 30% share of that is in this market is probably worth $50-60 million. I'm just saying, okay, 1 million ounce deposit on a property where it's very mineable, and it's a situation where I believe Barrick would be able to take the ore and process it through the Pueblo Viejo mill.
Yeah, low capex there, and so
exactly.
That'd be like 6 to 8 fold gain then from these levels, right?
Right, and I'm just saying, okay, this gold in the ground is worth $150 an ounce, and by the time that event unfolds, it could be worth a lot more. There were some deals in the 2010-2011 time period, when gold last ran up to 1900. There was a couple deals that got done that valued the gold in the ground at $1,000 an ounce. And I don't know that we're going to necessarily see that unless gold really moves into the 2000s. which it probably will. But so just conservatively, assuming this project plays out, it's worth $50 million. Well, to Precipitate, Precipitate's market cap right now is roughly, it's under $10 million.
Mm-hmm.
So it's kind of a head scratcher. And they also have another highly prospective project in the Dominican Republic that they can turn their attention to, and they have the cash now to start drilling it. So, and again, the project might not work out, but, and Barrick may abandon it. But your downside is almost nothing compared to your potential upside.
Dave, Bank of America, as you know, raised their gold forecast to $3,000. I know you don't need Bank of America to give you that forecast, but do you think for the psyche of the wider investing public, do you think there's any significance to that?
I think the wider investing public isn't investing in this sector yet, and that's why it's such a fantastic opportunity right now. So, the investors like your audience, they've been following this sector for a long time, and some of them may have only been following it for a year or two, but they, at this point in time, they understand, kind of the market dynamics. So, and so you still have just a very, very small percentage of the total investor universe out there paying attention to this sector. At some point, the game of chasing momentum stocks higher is going to wear out, and the stock market's going to head south again. And when that money comes out, it's going to be looking for the next hot play, and that's going to be our sector, the precious metal sector.
And getting back to the GDX breaking through that 32 barrier, I think a lot of people from the technical standpoint are saying that that's going to attract a lot of the people that pay attention to technicals and also those momentum traders.
I agree with that. However, back in 2011, GDX was at 65. So for me, breaking through a technical barrier might attract the technical momentum money, but that's a short-term trade for those guys. Where I think it's going to get interesting is when the longer-term investors, and we saw this in 2010, 2011, general mutual funds, like, a general stock market fund at Fidelity would start buying mining stocks. And that's the more stable investor base and the longer term money. And that's ultimately when that money comes in, and it hasn't even begun yet. Like I said, we're still in the smart money accumulation stage. At some point, the mutual funds and the hedge funds that aren't momentum, that are basically fundamental based investing hedge funds, they're going to start moving capital into this sector. And that's when the real fireworks will start. But you're right, breaking through that technical barrier, I'm just looking at a 10-year chart of the GDX. Breaking through that technical barrier is certainly a milestone for the sector. And your audience, your listeners can pull up, a 10-year chart of GDX. You can see that there's not a lot of overhead resistance until we get into, the low 40s on GDX. So, I think we're going to grind higher steadily. And I think, by the end of the summer, people are going to look back, and if they didn't invest in the sector now, they're going to feel like they're chasing it and regret not putting money to work right now.
Before you leave, Dave, any other juniors that you could share with us? I know listeners like when you share some of your investing ideas, which again you first revealed to your subscribers of the Mining Stock Journal.
Sure, and the ideas that I consider my top ideas, I started kind of two new things in the last several issues. And one is because I kind of felt like a lot of investors don't want to just focus on juniors. So I started putting ideas on some of my my favorite larger cap producing stocks. And there's not that many because, in my opinion, companies like Barrick and Newmont are not well managed. They're big corporate bureaucratic structures, and those stocks are doing well right now because, to the extent that large funds are putting some money to work in the sector, they put it into Barrick and Newmont because they're the largest market caps and they're the most liquid, and it's easier to move in and out of big positions in those stocks. But there's a whole handful of smaller large cap producers that are still undervalued now, and so I've been putting a list of my 3 or 4 favorite larger cap producers And also I include ideas for using in the money call options, because some of these stocks, take Kirkland Lake. I mean, it's a $40 stock. So, you're going to buy 1,000 shares of Kirkland Lake, or would you rather buy 20 deep in the money call options for say, half that cost, and get the leverage of owning 2,000 shares? And these deep in the money call options, if you don't go too far out on the expiration curve, have very little time premium in them because they're deep in the money. So they basically track the stock almost on a 100% tracking basis, right? So if you think that the sector's going higher, you can get a much better bang for your buck by buying deep in the money call options on stocks like Kirkland Lake or Agnico Eagle, and there's a handful of others that I have been putting in my newsletter lately.
They're not as risky as the out of the money calls, of course.
No, they're basically are going to track the stock.
Yep.
So the idea here is that you're getting the leverage of more shares without putting up that amount of capital. See what I'm saying? And I've started kind of with each issue, I kind of update my list, my top picks, and I have I preface it with, this is for junior explorers. This is, and I put it into categories of, less risky down to pure speculation, which is where Precipitate has been, in the pure speculation area. And I just say, this is what I like right now. I like all the stocks that I cover in my newsletter, or I wouldn't cover them. And this is my my list right now, but this list could look very different in the next 6 months, depending on how the events unfold at each of the companies I cover, and the news flow and things like that. So as an example, there's one stock, it's Paramount Gold, and I don't know if your audience is familiar with it, but they've got it's essentially about a 4 million ounce gold deposit in Oregon, southwest Oregon, maybe it's south central roughly. And the market was kind of leery of this one because they weren't sure, Oregon is associated with, tree huggers and tough environmental rules. Well, this mine or this project's in an area where the economy wants the jobs, and the company's been working very closely with the environmental regulators, and they've actually had less. So they're at the point now where they're just about ready to, as soon as they get the various environmental approvals and things like that, their project's almost shovel ready. And it was essentially trading at a market cap of under $10 million, which I thought was insane. Now the stock since March 23rd has nearly doubled. And I think that's because the market's finally waking up to the reality of it. But, this is what I said about Paramount in my April 2nd newsletter when the stock was at 59. It's trading at 105 right now. I said it's an absolute joke that the stock is trading at a $17 million market cap, given the quality of the deposit and the likelihood that the company will either successfully advance the project to a mine or be acquired. So, I mean, you got a 4 million ounce project, and granted, a lot of that is inferred, but and I forget what the exact number is on measured, indicated, et cetera. It's over 1 million ounces, well over, and it's high grade. And
is there an Oregon discount there? We know Idaho and Nevada are good. When I hear Oregon, I think a more liberal government.
Well, that's the whole thing. Is the government's actually been like really cooperating with them because they want the job. They're trying to promote mining projects that are not along the coast, because that's where your tree huggers are along the coast. But Oregon needs the jobs, especially the central and eastern part of the state and southern part of the state. So, you don't have the high tech millennial economy of Portland or Eugene, the college economy of Eugene down there. So, I think part of the issue with it is it's got a very small stock float. It's only got like 30 million shares outstanding, which is perfect for a stock like this because, even at $1, you're looking at a $30 million market cap. And this is a project that is, potentially worth $200 million. I mean, tell me where the price of gold is, and I can tell you, like on a horseshoes and hand grenades basis, approximately what this project should be worth given that price of gold. So, it's an example of, and it's why I tend to follow the juniors, is because the market tends to be very inefficient with how it values them and how it looks at them, and a lot of companies kind of fall off the radar screen, and this was one of them. But we own it in my fund, and I know a lot of my subscribers were loading up on it when the stock was trading at 50, 60 cents instead of $1.
And this is an example, too, of one of those stocks that's going to move in one of these, the royalty company moves, the majors move, the mid-tiers move, and then down the road, as this bull progresses, a stock like that is going to begin to move. That's
right. And speaking of the royalty concept, there's another company called GR Silver, and they've got a project in what's known as the Rosario Mining District. It's in kind of northwestern Mexico, and Fresnillo operates in that area. And these guys pretty much control most of the district. They just did a deal with First Majestic where they took over a First Majestic property, and there's been historic mining and a very, very high grade silver in this district over the year, historically. So, and these guys have been producing some phenomenal drill results. And again, this is a stock that, let's just say the market cap is roughly $17-18 million, and if they continue to produce the type of drill results that they already have an existing resource on the property. It's under 1 million ounces, but if they can prove up, district wide on their properties, I don't know, just call it 2 or 3 million ounces of gold equivalent. So because the resource it's silver, it's gold, and it's polymetallic. I mean, you're talking about the potential here for this property to be worth a couple $100 million. Now, First Majestic owns just under 20% of the company, and Sandstorm did a deal with them, and Sandstorm, I think, owns 4 or 5% of it. So the guy who runs it, Mario Fonseca, was at Silvercrest Mines when First Majestic took over Silvercrest Mines, which included the spinoff of what turned into Silvercrest Metals. And now I think he's kind of following the same model that they used at Silvercrest Mines. I truly think that what he's doing here is he's going to, put together a shovel-ready project, and, it'll be swallowed by either Fresnillo or First Majestic. That's what I think the end game is here.
Well, Dave, thank you for sharing those insights. And to get more insights from Dave to your email inbox, I believe twice a month, go to investmentresearchdynamics.com. Dave also posts numerous blogs per week if you want to get Dave's written form thoughts or be a subscriber to the Mining Stock Journal. Dave, as always, thanks for coming on today's show.
Thanks for having me, Bill. It's always a pleasure.